Assalamualaikum warahmatullahi wabarakatuh. My name is Khairiah binti Kyudin, 2637799. So today I will explain about the question that occur or faced by the Caribbean brewers in transfer pricing, ethics and the governance. So for the first question is, how can the majority shareholder shift their wealth through the accounting cost allocation and transfer pricing? So for the first point is, the majority shareholder have the control over the corporation, which based in this case that Gera International is a majority shareholder that have share control about the 75% in the corporation. So they have the major decision to be decided by the majority shareholder. So how it can be done? It by it can shift the wealth by allocating more costs and enabling the transfer pricing to be used with subsidiary to save the cost. So it will manipulate the high tax area and the low tax area, which high tax area that we give more cost and the less and the otherwise for the low tax area there will be lower cost and increase the profit in that area. So for the second question is, how was it done in this case of Caribbean brewers? The first one is Gera beer is consumed longer and more time intensive production process where the overhead cost cannot be allocated depend on the volume. So the cost allocation that will be increase the cost and decrease the net profit that will be effect in the tax, which is they have the lower tax. So this is why it happened, because in the cost allocation they have to show the incremental in the production. So as Gera bill, based on the case, they have to be deposit about $8 for a piece for the one case. So there will be two effect on how it can be done. The first one is the cost of production in the market is very high. So and the second one is there is no deposit for the export uh, in the Garabia. So for the second question in the transfer pricing, so how was it done in the transfer pricing? So there are some steps, which is the Gera International, which is the majority shareholder that produced the Gera bill will send to the Gera Caribbean to be sold at the $25 without the tax. So after that, they will be export the product to the island as the price is $15 and also include some deposit in it. So the price is quite different to the Gera Caribbean. So Gera Caribbean will earn more profit as they will not incur any tax, and also the sales for the product is very good. I will explain about the third question is, who is harmed by the wealth shifting that been discussed above. So first of all, that person that will be harmed in this case is the minority shareholder, because of the minority shareholder currently receive 25% of share, but they have been decreased to the 8% that shown in the Jensen case. So the company faced less profit and affect the dividend payment to the minority shareholder. So for the second one is employee, is where the production has been declined in the operation. So the employee will only get the bonus if the total production less than 43% of the sales. So there will be the cost allocation and transfer effect, the income and the cost production in the operation. This is because they will affect the bonus of the employees because they reduce the payment of bonus. This is of the profit that we receive in the operation is very low. So the third party that will be effect in the wealth shifting is the government of Antigua. Because of what? Because there is the wealth shifting occur. So the Guerra International reduced the tax payment that will be effect to the government of Antigua, where it will cause the revenue received by the government will be decreased, and they have insufficient fund where it will have the bad effect to the citizen of the Antigua, because they will be reduced the benefit for the citizen, as well the infrastructure and the living costs.
So, for the first question is, as an advisor to the CFO of the Caribbean Bureaus, to whom are you responsible? So, first of all, we gonna responsible to the CFO because he responsible in managing the finance. So we have to advise the CFO on how to be in managing the finance and budget using the financial report. And after that, the head of accountant, which responsible in prepare the profitability statement. We can use the profitability statement to monitor the income or the expenses of the operation. So for the third one is production manager, where the Joseph Jane can be managed by we assign or allocate the cost to be make sure the efficiency of the production and the quality of the beer. So for the other part is we have to responsible in advise the CEO and the board of director, because it relate with the operation day to day in the business. And after that, in the code of ethics, where there will be effect some the code of ethic because of the transfer pricing that occur in this operation. And the last one is the code of ethic, where the religious believe that if you do the bad thing, it's gonna be bad, and if you do the good thing, it's gonna be good for you. So lastly is, what are the implications of the composition of the board members to the reporting of the CFO? So as we can see that minority shareholder, that will be effect in this case, because the company get the low profit, as will give the less dividend, and also the employee will get the less bonus. So the decision made by the majority shareholder is affect them towards their income. So the minority shareholder will pressurize the CFO to earn more profit in order to sustain the operation of the organization. So that's all from me. Thank you.